Welcome to SIA's Climate United Academy, the winter outdoor industry's guide to meaningful climate action.
Hi, everyone. Thanks for joining us today for this next conversation in SIA's Climate United Lab. I am Chris Steinkamp, the head of advocacy at SIA. And today we're talking about banking and investments and how you can make changes to your corporate financial strategy to take a big bite out of climate change. So we'll explain all this in a minute. But first, I want to introduce the other half of this conversation and welcome Charlie Bischoff, the Treasury Manager at Patagonia. Charlie's going to talk to us today about how best to approach your banking and investment portfolio if you're a business that's serious about investing in climate change, whether you're a large business, small business, or a medium-sized business. So let's just jump into it. And so without any more delay, hey, Charlie, thanks for being here today.
Yeah, so I'm Charlie Bischoff. I manage the Treasury function for Patagonia. Been with the company for about 3.5 years. Treasury is a part of overall corporate finance that deals with managing the company's global cash balances, foreign currencies, forecasting, and then most relevant to this conversation, I help to manage the company's banking relationships, insurance relationships, and any other financial institution that provides support to Patagonia. For those who aren't as familiar with Patagonia, we're a global outdoor clothing retailer. We do business in North America, South America, Europe, South Korea, Japan, and Australia. And we are a clothing company, but we're also an activist, and increasingly so, we've become more of an activist that uses clothing sales to drive that activism work. Our mission statement is we're in business to save our home planet. So everything that we do as a company, even in the finance department, is kind of anchored to that environmentally focused mission statement.
That's awesome. Well, thanks, Charlie. And it's just an incredible example that you're setting for the industry in terms of how a business can really be powerful and impactful on some of the issues that we care about, but that also impact our industry. So, can you tell us a little bit about what Patagonia is doing to align its banking with its environmental values?
Yeah, so since the beginning of our company, really, we've always been focused on making products that have minimal harm in the process of making them. We've been very focused historically on our manufacturing supply chain, and as the environmental crisis gets worse and worse, we've had some pressure to go deeper and deeper into our supply chain and try to find ways not only of doing less harm, but of actively doing good. And as we venture deeper into our supply chain, we end up in our financial supply chain, which kind of goes beyond making the product, but they refer to the financial institutions that support the company and the financial needs of the company. And so our goal right now is to make sure that our company's strong environmental values are reflected in who we choose to partner with in the finance area. So we're being very careful going forward about the banks that we choose. We're primarily looking at their involvement in the fossil fuel industry. The end goal is to bank fossil fuel free. That's not really a reality right now, just where the industry is, but it's the ultimate goal. And then we're also going to be applying that same methodology to all other types of financial institutions, whether it's an insurance company, a credit card company, or any other financial institution that supports Patagonia in any way.
Awesome. And, can you just talk a little bit about how did this all come about and why? I don't know if a lot of people really understand the connection between banking and investments and climate change, for example. Can you just talk a little bit about that?
Yeah, so I would say it kind of came about in around 2016 during the peak of the Dakota Access Pipeline protests. The company was very involved and concerned over what was happening. And so the board came to us and wanted to make sure that the company had no ties to the fossil fuel industry financially. And as a company, we don't invest in the stock market or the bond market or anything like that. So divestment wasn't really something that we had to worry about. But we wanted to look further down the investment line. And so we came to our operations, our financial operations, where we have credit lines with banks, and we have cash with banks, and we have policies with corporate insurance companies. And we really wanted to make sure that the institutions that we were partnered with, while we're not directly investing in them, we're still supporting them. So in a way, if you have cash at the bank and that bank is financing fossil fuels, in a way, your cash is being invested into the fossil fuel industry. So that's kind of the way that we looked at it. And overall, just with our mission statement, which is we're in business to save our home planet, it kind of tasks all employees at Patagonia to find ways to contribute to that mission statement, including finance. So that sort of reinforced, our drive to really dig deep into our financial supply chain to make sure that we're banking and we're insured in a sustainable way.
Awesome. Are there other, besides beyond banking, are there other sustainable finances that you're working on as well?
Yeah, so banking's been the main focus. That was kind of the early focus. But as we looked into banking, we realized it was kind of a rabbit hole where the deeper we dug, the more we realized that there's more and more that we could do, and that hasn't stopped. Every time we kind of wrap one thing up, there's one more thing we realize that we can do. So banking's been the focus, but we're also taking the same methodology with our insurance business, and where we're trying to purchase insurance policies from corporate insurers who aren't insuring or investing in the fossil fuel industry. So kind of the same method as banking. We're also looking for ways to manage our excess cash. So all of our cash doesn't need to sit with our main banks. We can deploy it into community-focused banks or smaller fossil fuel-free banks. We're looking at some investment opportunities where we might invest in green bonds, which are basically bonds that fund sustainable projects at other companies and in other countries, et cetera. And then kind of on the horizon, which we haven't really even had the chance to get into yet, we're going to be looking into the credit card providers that we use, some of the trade, the manufacturing and inventory and trade related partners, because there's some financing involved there too. So really there is no end in sight to this. And then kind of outside of the scope, but things that we have done in the past as a company is a few years ago, we made sure that we were offering our employees fossil fuel free 401k options. So that was sort of something that was linked to sustainable finance, although it's not directly in the scope of what I'm working on. And then we also have a venture capital arm of Patagonia called Tin Shed Ventures, and they invest in early stage startups that provide solutions to the environmental crisis. So there's a lot of other areas that our companies has already been involved in before we really dove into this whole banking and insurance process.
Yeah, I mean, that's amazing. And, when you really think about it, there's billions and billions of dollars that's being invested just globally in fossil fuel, correct? I mean, this is a very big area of impact.
Absolutely, yeah. And it's a huge lever because you think about financial institutions and they have a lot of power. They kind of can determine the velocity of an energy transition into renewable. If they're going to continue funding fossil fuels, there's going to continue to be fossil fuels. So it's a really important area to look at and to focus on because there's a lot of potential impact there. And I think there's a lot of potential for good impact if we can pressure our financial institutions into being more sustainable and funding more sustainable things as opposed to the fossil fuel industry and other harmful industries as well.
Yeah, absolutely. So let's kind of pivot a little bit and talk about your approach. Did you want to throw up a couple slides?
Yeah, let me share my screen. Yeah, so one of the challenges that we've faced is that we're a larger global company. We need to work with large global banks. The issue there is that no large global banks are fossil fuel free or even remotely close to fossil fuel free. But there's a spectrum of leaders and laggards. The leaders are the ones that are maybe on a faster trajectory toward becoming fossil fuel free. Maybe they're limiting some of the most harmful areas of fossil fuels. And then the laggards are the ones that aren't doing anything. They have no policies. They continue to fund coal and tar sands and some of the more harmful industries. And then on the small bank landscape, there are fossil fuel free banks. There's an opportunity to bank fossil fuel free, but so our strategy has kind of been to spread out our financial needs across multiple financial institutions. So we realize that we need to partner with a large global bank. So we're trying to find large global banks to manage the U.S. needs as well as the international corporate needs in our other countries. For those, they will be large banks because that's what we need as a company. But they will be banks that we hope that are on a trajectory toward becoming fossil fuel free, and more on the leader side of that spectrum of leader to laggard. But because all the true leaders in fossil fuel finance are smaller banks typically, we're going to go out of our way and we're going to allocate certain services to those small banks that don't necessarily need to be met by our large banks. So we're basically going to spread ourselves out to hopefully maximize impact here. And as a criteria for selecting financial partners, we're really basing it off of the fossil fuel industry, and the policies these banks have in that industry. So we've sort of drawn a line in the sand where we will not work with banks that don't have prohibitive policies in coal, Arctic, and tar sands. So if a bank has no policy and they continue to fund coal power plants, coal mining, Arctic drilling, or tar sands, that's a bank that we just won't work with. We're not going to waste our time to try to push them in the right direction. That's today's hard line. And then, of course, the ultimate goal is banking fossil fuel free. And there's a whole other host of fossil fuel sectors that fall into that unsupported area. So that the intention is that over time we can add more of those unsupported categories into the prohibited category as the banking industry moves forward and becomes more sustainable. And then, of course, there's supported industries. We want to work with banks that are funding a lot of wind, a lot of solar, regenerative agriculture. So those are banks that will take priority in our due diligence process when we go to select banks. And then we'll replicate the same thing with insurance. So just like with banks, we've drawn a hard line on coal, Arctic, and tar sands. We're going to do the same thing with insurance, where we want to make sure that our insurance carriers are not also insuring those same sectors.
Thanks, Charlie. This is really cool to see how you've broken it down into these three different buckets. Obviously, there's not a one-size-fits-all solution yet. So this is really interesting to see how you've kind of segmented it out.
Yeah, no, we're excited about it, and this took a long time to figure out. It took a lot of soul searching and strategizing. Originally, we thought we'd be able to go and find a fossil fuel free bank, move all of our business over to them, and that would be the end of the project. But we learned that it's a lot more complicated than that. So we feel that this is a really good start. But as I mentioned, this is a fluid strategy. So the idea is to be more and more strict over time, and to hold our banks accountable toward becoming more sustainable over time. So we plan to engage in regular conversations with them and understand what their trajectory is, what their strategies are going forward. So really trying to use our leverage as a valued client to make sure our banks keep moving in the right direction.
Well, I just wanted to ask you, so obviously, why is it important for other companies to prioritize this as well? I think we touched on it a little bit earlier, but can you just talk about if I'm a smaller, medium-sized business, why is it important for me to do this?
Yeah, so I think most people understand this, but cash at a bank doesn't just go to a vault and sit there waiting for you to withdraw it at whatever point. Cash is your deposits are being lent out the other side of the bank. So if you have $100 in deposits, the bank is probably lending out 90 of those dollars to other companies. So it's really important for people to understand and think that way, because whatever a bank is kind of an investment in whatever the bank is lending to, it's sort of an indirect way, but that's how we think about it. And I think that's the important way that companies, big or small, should think about banking. And so with that in mind, banking is a huge lever. You can really use your leverage as a client to shift business toward more sustainable ones, to make sure that your cash and your business is being used to support something that aligns with environmental values. At the end of the day, pipelines won't get built without banking or without insurance. So if we can influence the banking and insurance industries and other financial industries to adopt more sustainable policies, then there's going to be a real positive shift, we think. And banks do have a lot of power. Like I mentioned earlier, they determine the velocity of this important transition, but clients hold power over banks. They're going to listen to their clients at the end of the day. So if there's a wave of clients that start asking their banks about these types of things, they're going to listen up, and they're going to hopefully make some changes. And then I would just say, for any company that's looking at just the way they make products or their supply chain, the way that we've started to think is that you can't look at supply chain sustainability without also considering your financial supply chain, because it's just as important of an area of the business. So that's kind of our strategy, is to look at this as an extension of our main supply chain.
Just to kind of get to the nitty gritty of this, what should companies look for when they assess banks? And is there a resource that they can use to help them measure this type of responsibility? How do you really dig into this and understand what your bank actually is doing?
Yeah, I think the first step is just to identify what your values are, what matters to you. For us, it's primarily been environmental values, although we also have strong social justice values. So we're trying to incorporate that as well in various ways. And then from there, it's understanding who you're working with. Patagonia works with dozens of banks around the world. So that was a really long process for us to really figure out who we're working with, what their policies are. We actually created our own proprietary scorecard that we sent to all of our banks that basically surveyed them on their sustainability policies. And that gave us a better understanding of where they're at, where they're going, and whether or not they're a partner that we want to continue to do business with. Um, and then from there, it's just about opening up dialogue with them and having that conversation. And just doing those steps alone is impactful. And as far as tools go, one report that we've looked at pretty heavily is um, the Banking on Climate Change report, which is
Mhm.
a report that's put out by a number of NGOs. And that report's been really helpful for helping us identify two of the main parts of our due diligence. The two things that we're focused on, I mentioned one of them earlier, which is policies. We're really focused on bank policies. Do they have a policy on tar sands or Arctic oil and gas or coal or any other area? So we're focused on policies, and we're also focused on the level of involvement. So how much did they fund in overall oil and gas last year or the year before? And that Banking on Climate Chaos report gives both of those pieces of information. So that's been really helpful for us. Um, and then, like I said, once you kind of identify that due diligence of looking at policies and involvement, it's all about just having those conversations with your bank or your insurance company or whoever, and just getting a better understanding of why their policies are what they are, where they're headed in the future, et cetera. And then overall, I think just kind of the theme of being mindful that your involvement with financial institutions can have an impact, positive or negative. So it's important to think about this as not being some passive thing that's happening in the background. It's a real opportunity for impact.
So would you say this is kind of a long-term conversation? Because obviously, in your experience, there isn't that one bank that can serve all of your needs. So, how should a company build an effective plan around a somewhat imperfect solution? And I think this goes back to your chart, but just to kind of dig into it for another minute or so.
Yeah, I think that was an early finding of ours, which is it's a journey. It's not a project. I keep saying project, but really it's a journey, and it's kind of just a way of doing business going forward. We
Mhm.
originally thought we'd be able to just switch banks, and that would be the end of it. We sent out a press release, and we pat ourselves in the back, but we realize that it's a lot more complicated than that, and it's a way of doing business going forward. We constantly have new financial partners coming into the mix, and so it's just we have this infrastructure of ways to do due diligence on them and to determine if they're a partner we want to work with or not work with. But I would say overall, the strategy can be whatever you can handle, whatever you're able to. And I think every type of business, big or small, industries, it can be tailor fit, and it can be your strategy can be as simple as just having that conversation with your bank, or it can be as in the weeds and detailed as what we've done, which is to fully realign the company with institutions that share our values. So I don't want to discourage people from thinking that it's this huge project, because it doesn't necessarily have to be. It can be anything from that conversation with your bank all the way up to full reimplementations or anything in between.
Mhm. No, that's great. And I'm sure that, like once you kind of figure out where you want to go, it probably takes some time to unravel the old relationships and the complex banking partnerships that companies have had for years. Like should a company start to think about as they begin to unravel those partnerships?
Yeah, and like I said, if you're a company that wants to really go all in on this,
Hmm.
it's a big project and it's a process. It's not weeks, it's not months. It's probably closer to a year plus.
Hmm.
So it's a really big commitment, but like I said before, it's a huge kind of lever for impact. So it's been really important for us to go about this. But for us, it's required years of due diligence, understanding who we're working with, understanding who we may want to be working with in the future, um, and going forward as we may or may not change banks and insurance companies. That requires legal resources, IT resources. Because a company our size, our banks are really tied into our ERP systems, and there's contracts and there's things like that. So it's kind of a very sticky relationship where you're really it's a you hope that your bank relationship is a long-term relationship.
Hmm.
So sometimes it is challenging to unwind them if it comes to that. But like I said, to us, it's a worthy endeavor.
Absolutely. And you had mentioned something when we spoke the other day about, even if you start with your payroll at a smaller community bank, that would be a good place for a smaller company to start, for example, right? I mean,
Absolutely, and that's kind of the easier low hanging fruit, I would say. Like for example, Patagonia, we're a member of 1% for the Planet, and we have a deposit account that manages that cash before it goes out to our grantees. So that's an area where Patagonia is trying to find ways that we can peel away those banking services and allocate to maybe a bank that's a B Corp or a bank that's a fossil fuel free bank. And those are generally going to be smaller banks, but we look for kind of the lower impact services that don't need to be met by our large global banks. So we're able to really partner with the highly value aligned institutions on that front.
Awesome. Well, I guess the final question I have is, are banks and investment companies listening? When they get a phone call from you or a document from you asking about their investment policies and fossil fuel, are we starting to turn the tide a little bit on this?
Yeah, I would say in my experience, when we started looking at this a few years ago, we were looking for peers to copy from and to find a blueprint to use for this journey of ours, and we weren't really able to find that in the corporate space. There were some cities and some universities that had changed banks for environmental reasons, but no corporations like us. So we had to really kind of go about it ourselves, we felt, and come up with this process. But kind of since then, over the last few years, as we continue to network with other companies and other folks, we realize that a lot of people are considering this. Some people are already doing it, and some people are very interested in doing it after we share this process with them. And then just from the conversations we've had with our own banks, we have seen some positive changes result from those conversations. So we're not the size of a Nike or an Amazon or anything like that, but we're an important voice for our banks, and so they listen to us, and that was really eye-opening to see very large banks respond to some of the conversations that we had with them around maybe making their policies more progressive or reducing or committing to phase out plans of fossil fuels in the long term. But I think that was really eye-opening for us. But at the end of the day, we're one company, so we're hoping that other companies sort of follow our footsteps here, and because obviously there's power in numbers. So,
well, I was just going to say, I mean, Patagonia is such a influential voice within our industry as well. I mean, you guys set the standard for activism and how companies in the private sector should go about addressing these issues that we care about. And one company doing this is powerful, but getting the whole industry behind this is really going to create some real change in terms of climate change and meeting the science-based targets that we need to meet in such a short window. So, thank you for your leadership on this. It's really cool and really insightful and inspiring to hear everything that you're doing on this and why you're doing it. And, our hope is that, your example will kind of inspire others to join as well. And then we've really got some progress. So, well, Charlie, thank you so much for joining us today. This was really helpful and inspiring and valuable, I'm sure, to everybody that's listening, and I truly appreciate your time. And thank you all for joining us for this Climate United discussion. We hope that it was helpful as you build your climate action plans, and we'll be in touch soon. Thank you very much. Thanks, Charlie.
thank you.